how many got the funding? How many got the funding? Fewer hands. So the rate of decline is very high. Do we have Chris? I would like to get into the next session, if that's okay. Is there any? Had her hand up, yes, and tell us what you do, your business.
Good morning, everyone. My name is Stella Matarimo. I run a cleaning business, majoring on upholstery cleaning for households, small offices, and institutions. So the reason why I think, or we think, SMEs don't get funding is lack of knowledge on how to access the funds.
Okay, lack of knowledge. How to write proposals, I believe. How to put your papers in order and all that documentation that takes forever, yeah? Okay, so So this event is hosted by Wylde International. They are our hosts. I'll tell you a little bit about Wylde International. It's an innovative management consulting firm specializing in strategy development for SMEs. And Wylde's vision is to see Africa reach a level of global influence. Over the last 12 or so years, Wylde International has trained over 4,000 entrepreneurs, giving insights on actionable business growth strategies. So what they do is that when the SME comes here, they'll talk to you, they'll do a mapping of business, and they'll help you to come up with a strategy. Because when you don't have a strategy, you don't have a mapping of how you're gonna get to your goal. So, and when you're most SMEs, it's all about you're in action mode. You're doing all the work and you rarely lift your head to see the bigger picture. So, as I said, this event is hosted by Wylde International. We have done a research on access of finance report for SMEs. What are the challenges they are going through? Do they get, what are the success rates? What are the, how often do they get declines? And how can they improve their chances of getting finances? So we have with us the CEO of Wylde International, and his name is Chris Odongo. I like Chris Odongo because he's very passionate about what he does. And he has, let me read for you what he's done. So Chris Odongo is a strategic planning consultant and business coach with over 22 years experience working with SMEs across Africa. He is creative and practical in his approach. I can vibe because he's very passionate when he's talking to SMEs. He has top skills in business coaching, strategy development, facilitation, leadership development, and personal development. At Wylde International, Christopher leads our team of brilliant consultants and associates to deliver an inspirational growth program for entrepreneurs that to date has transformed more than 300 businesses. If you're looking to build a robust entrepreneurship ecosystem or to build an organization from startup to growth stage, or to motivate entrepreneurs or employees to achieve their goals, Christopher is the right person for you. So as I was saying, I used to run a bakery, and I remember getting an email from Chris telling me to come for a strategy meeting. And I told him I don't have the time because I was doing all those things. As I was saying, I was the baker, the accountant, the marketer. And if I'd come for the Wylde strategy meeting, maybe I would have sold that business rather than close it. So welcome, Chris. On stage, I'd like him to tell us why he did this research, why he commissioned this research, what has been his experience with SMEs trying to access funds, and how he even prepares them to access funding. Karibu sana, Chris. Please take the mic.
Good morning, ladies and gentlemen. distinguished guests and our panelists. We'd like to thank each and every one of you for making time to join us today as we launch this report on SMEs access to financing. We are very delighted to be part of this conversation. As you've heard, my name is Chris Odongo. I serve as the CEO of Wylde International. At Wylde International, we believe in the power of businesses to create wealth for their owners and for their employees. And so we work tirelessly to ensure that we can help businesses create strategies that they can use to succeed in the market. And we know that when we are doing this, we are helping meet one of the three needs that businesses have. When you look at businesses, you find that three of the things they say they have as needs are: one, businesses need knowledge and know-how on how to run their businesses and to make the right decisions that can help them to make progress. Two, businesses require capital for them to be able to open up new markets, for them to be able to provide, to have stock and inventory, for them to be able to produce goods and services, and they need capital. And businesses need capital even to start, you know. And then the third thing that businesses need are access to markets. They're looking for customers, they're looking for where to take their products and services, and they need to be able to be supported in getting this. Any good business, if you find a business that is doing well, is a business that has gotten these three things right. In terms of knowing their business, that business knows their customers, they know their business model, they know their products, they understand what it takes for them to succeed in the market, and that is primarily what Wylde helps. Wylde helps businesses to get clarity on the decisions they need to make in order for them to succeed. We call these critical success factors. And a lot of you who have been taking our programs have been drawn towards understanding what your critical success factors are and being able to make the decisions around that so that you can be able to make progress. And then secondly, we know that businesses need capital. They need capital in the form of money to start your business. They need capital in the form of money to stock goods and services. They need working capital. They need asset finance. And so today, as we launch this report, we are saying that businesses require these three things, and we contributing knowledge, the information, and the data to help policymakers, to help businesses themselves, to help those who support businesses to make better decisions around how they help these businesses. And so I am delighted to have each and every one of you here to participate in this, in the launch of this report. We shall be able to get into the details of it, and as we get into the details of it, we shall unpack it. Let me start by also thanking our panelists. We're expecting Masi Guru, Maureen Ambakane, Dr. Gitau, Ken Waititu, and George Owuor, representing different organizations as we do the launch of this event. We are also honored today to have several of our partners. I can see them in the room. Thank you very much for coming, representing different organizations. Grace, Manasseh, Wohoro, we appreciate you. I've been told that there are people from LA, the LAPF, yeah. And we really, really appreciate you for making time to join us today. Wangeshi, back to you.
Okay, all right. So thank you very much. Did I hear why you commissioned our research?
Yes, I can repeat.
Yes, please repeat.
All right. So I think when you think about research, when you think about data, when you think about information, we are all trying to make decisions around our businesses. And so for SMEs, you're trying to make a decision around what's out there in terms of availability of capital. Should I go to a bank? Should I go to a Shylock? Should I borrow money from my from my mom or my sisters or my brothers? What exists in terms of the access landscape? And so that's a decision you want to make. As an SME, you're also wondering, am I the only one suffering from lack of access to capital, or am I the only one who's getting capital? And so when we're doing this report, we were saying, can we be able to inform SMEs, and they can they be able to make the right decisions in as far as access to capital is concerned? What are some of the things that are causing SMEs to not have capital? We've captured that. What are some of the experiences that SMEs have in as far as access to capital is concerned? We've captured that. What are some of the sources of funding that exist for SMEs? We've covered that. So if you're an SME and you're looking at accessing capital, there's information here that can help you to be able to make the right decision. If you are an organization that is working with SMEs and you're looking at how do I provide support to them in as far as access to capital is concerned, then there's information in this report that can help you to be able to make the right decisions and to structure your program in the right way so that then you're able to be more effective with SMEs. Questions such as, which are the paths that work for SMEs to access finance so that you can be able to help them? Questions such as, what are the challenges that SMEs have in as far accessing capital? They are in there, and you can be able to now use that to make better decisions. We are also doing this for policymakers when they're trying to create an enabling environment so that SMEs can access funding. There's information here for them to be able to make that. Wylde has fundamentally believed in playing a leading role within the ecosystem. When we started offering our business strategy programs back in 2009, it was one of the only business strategy programs that were being offered. During that time, there was a program called Chora Bizna that was being done by the government of Kenya with the Kenya Institute of Management. Other than that program, there was Wylde's Greatness Business Club. And then there was nothing else, you know. And as people came into the market and were looking to launch their programs, we would talk to them and share with them our experiences and help them shape their own programs. And so we have been part of helping other organizations succeed in offering programs for entrepreneurs, programs for business owners, so that they can be able to also succeed. And so our putting this report together is also aimed at helping everybody else within the ecosystem begin to understand what it takes to finance SMEs and to finance them successfully.
Okay. Auntie Sana, has that whet your appetite to hear what the research has? So thank you very much, Mr. CEO. Yeah. That's CEO of Wylde International. Their mission is to see Africa reach a level of global influence and create inspirational programs that transform individuals, organizations, and strategies. So please have your seat. So to help us, I hope you heard that the report is to give SMEs data that they can work with, factual information that can help them move forward, and then it's also helping anyone, SME enablers, those who are in the ecosystem who are working with SMEs. This report is able to unpack and give you factual, well-researched guidelines on how you can best support the SME. So we can't wait to hear what is in the report. And to do that for us is Mr. Kirinya Kidenji. He is the Director of Strategy at Wylde. He's a financial services professional with over 19 years experience, gained through serving in challenging relationships, operations, investment banking, and leadership roles in leading multinational banks. If I could have a mic, please. He has broad experience in the financial sector, having worked with various companies. He has broad I'm still not hearing myself. He has broad experience in the financial sector, having worked with various companies, chamas, teachers and young adults on areas such as retirement planning, company valuation, building a long-term savings culture, personal financial management, and leveraging credit and working capital to grow SMEs. One of the things I really enjoy about Kirinya is his clarity of thought. Even 1 minute sitting with him and you feel like, you need to put your life in order, personal and business. His top advice for individuals regarding financial wellness is cut off the unnecessary expenditure, then save and invest for the future. Did you hear that? Cut off the frills, save and invest for the future so that you have dignified retirement. Karibu sana, Bwana Kirinya. If you could take the floor.
Good morning. It's great to have all of you here, and it's an honor to take this time to present just a bit of the findings that we have. Am I on? Not yet. It seems to be on. Okay. But I can project my voice. All right. All right. Mic check. Mic check. I think the mic's on strike today. Check, check. Mic check. Good. All right, so I was saying it's an honor to have you attend our event today. So karibuni sana. What I want to do now is just to share a few insights from the report, and then explain what we do to support SMEs as accessing finance is concerned. So very briefly, we know that the purpose of this was just to understand the current state of financing needs. That's why we set out the report, and we wanted to see. Check. So we wanted to see what opportunities exist for SMEs, what gaps exist for SMEs, and whether what we do as Wylde International, which is helping firms come up with strategies, actually does make a difference as far as financing is concerned. So we interviewed about 104 small and medium enterprises, and I'm just going to highlight just a few of the key findings as far as demand for finance is concerned. Then we have a message for financiers, and then after that, I'll talk about what Wylde can do in helping small and medium enterprises access finance. So here's the thing: 96% or 9 out of 10 SMEs interviewed indicated they have a need for funding. They have a need for funding. Now, what is shocking is that only 43% indicated that they were actually able to access finance. There's a failure rate of about 57%. So if most of the SMEs need funding, why is there such a high degree of decline? Now, the other interesting thing to add a spanner in the works is that most of the respondents indicated, number one, that they were actually aware of the different financial services providers or suppliers available in the country. So what you're really saying is that it's not because they don't know that financials exist. There must be other fundamental reasons why the 57% their applications were rejected for funding. And then, again, almost 6 out of 10 respondents indicated that they know there are many funding options that they are available in the market. So what you're really trying to say is most people who sought to access finance in the last 3 years, about 2/3 of them were rejected. But they were not rejected because the SMEs who were applying for funding did not know that their financials were available. or they didn't know the services that are being offered by financiers. What is it? So what's the big driver behind this rejection? The big driver is pretty much lack of collateral. Almost 77% of the SMEs that we interviewed indicated that the biggest challenge they have with accessing finance is lack of collateral. The second big thing is limited business experience, and I'll tell you how Wylde comes in to sort that. And then low business turnover was the third thing. But 77% indicated their biggest problem was actually lack of collateral. So we have some messages for financiers. Ken, I'm glad you're here. Listen to this. So when we ask respondents how they determine what financial facility suits them, the top 4 factors are, number 1, business needs, which is a very good thing. It's a very positive thing. Why? Because a lot of the businesses, or many of the businesses in the past, have tended to borrow for their own personal reasons. So you're running your bakery, or you're running your small shop, whatever you're running it, and you have a personal need. Maybe your daughter or your son is joining Form 1, and you spent 200,000 shillings. Then you run to the bank to get that kind of money. So Ken, I can assure you, almost 80% of the people who will come to look for funding, it's business related, not personal related. Well, cost of financing is a big thing, and here we are not just talking about the interest rates. There are other costs that are related to financing. We're talking about things like charges, for instance, and negotiation fees and things like that. Then the period of repayment is a big issue also for SMEs, with 64% indicating that it's a big issue for them. And your requirements as financiers, Ken, I'm sure you'll be able to address that and the purpose of financing. Those are the 4 big issues for financiers that they need to take note as far as this report is concerned. Now let's talk about what's the biggest source of financing for SMEs. What we found out is that almost 8 out of 10 SMEs interviewed indicated that they use debt for funding. And that probably points out to a structural problem in the market. Whenever you hear SMEs talking about using debt for funding, it simply means that the alternatives to funding are limited. And if you look at the report, you'll notice funding such as equity, in other words, asking investors to come and invest in the business, is about 20%. and then grant and equity, more or less 20%. So, big question is, do SMEs have to be funded almost exclusively through debt? Our recommendation is no. I think we need to expand other sources of financing. Ken, I'm sure you agree with me. Now, what's the biggest need for small and medium enterprises? We found that almost 7 out of 10 indicated their business need is working capital. 7 out of 10 as working capital. Now, here's the thing. We also asked SMEs, did the financing that you received help you? Whenever you're able to access financing, did it help you? Incredibly, 93% indicated that the funding helped them. 93% who accessed funding in the last 3 years indicated that the funding helped them, and 75%, Ken, this is for you again, agreed that they are likely to use the same financier for their future needs. How is that? So don't chase away your clients. Do good to them. All right? Let's talk about support required. Then I'll talk about the profile of businesses, and then we can wrap it up from there. So 7, as far as SMEs are concerned, 7 out of 10 indicates that plan to get financing need support with linkages to financiers. Incredible. 7 out of 10 are saying, I need financing in the next 12 months. Please link me with a financier. Now, then there's the aspect about preparing business plans and getting collateral in order to access financing. But the most support that SMEs indicate that they need is really linkages to financiers. Let's talk about the profiles of the businesses, then I'll tell us what Wylde does in this space of supporting finance. All right. Now, what will surprise you is that most of the businesses that responded to our questionnaires have turnovers below 5 million a year. Yes, about 65% have turnovers of below 5 million shillings a year. So what we're really trying to say is that is a typical Kenyan small and medium enterprise. Yeah, they have turnovers below 5 million shillings a year. And the top 5 sectors, agribusiness is the top with 33%, followed by farms like Wylde, who are doing about 12%. So what we're really saying is if money is not flowing into the agribusiness sector, you're losing out on 33% of the opportunity. So what role does Wylde play in supporting access to funding for small and medium enterprises? What role does it play? All right, the first thing you need to note in the report, about 94% of the SMEs agreed that having a business strategy is the most important part of their financial planning. Now, strategy is our core product here at Wylde International. And 94% of the SMEs polled said having a business strategy is the most important part of their financial planning. So Wylde sits in a space that is highly valued by small and medium enterprises. But anyway, 4 things. How has Wylde been playing? What role has Wylde been playing in supporting accessing to funding for SMEs? Number 1 is what we call de-risking. Now, strategy is one of the best ways of de-risking SMEs so that they are attractive to financiers. Now, let me state this, because I have just a few minutes and I'll wrap it up. Let me state this. When it comes to SME risk, the biggest source of risk is the business model itself, is what you're doing as a business. That's the biggest source of risk. And in effect, really, as far as Wylde is concerned, there are only 2 kinds of business models. Just 2 kinds of business models. Number 1 is a valid business model, and number 2 is an invalid business model. Those are the only kinds of business models that exist. So when we come in with that risking strategy, what we do is to help valid business models succeed. So we have found that valid business models must first and foremost address clear market needs, and then their strategies are well executed. And then the third thing about a valid business model is that it can withstand competition over the long haul. So valid business models address clear market needs, they are well executed, and can withstand the headwinds of competition for the long haul. That's my point about business models. So what Wylde does is so fundamental to the success of the business models, because those are the 3 things that we target. Number 1, we ask you, what problem are you solving in the market? Number 2, what are you going to do? What do you need to put together to solve that problem in the market? And then number 3, we help you figure out how to survive competition. Now, once we answer those 3 questions pretty well, we know we have de-risked your business model, and it will be attractive to financiers. All right, so that's 1, de-risking. Let me run through the other 3. Number 2, we've also supported SMEs in business planning and writing business plans so that they can access finance. We've done that for over 30 agribusiness enterprises in the last 2 or 3 years. And then the third way we've been supporting SMEs as far as access to funding is concerned is capacity building, especially around financial management and business management. And the 4th way we've been supporting SMEs is through debt restructuring. Some SMEs have their debts that have gone south, and would help them restructure those debts. Fundamentally about rejigging their business model, and then once they become profitable, of course, they're able to get out of their debt trap. And with that, I think I can stop there. Thank you very much.
Thank you very, very much. Did you hear anything that caught your attention? Okay, if we could have a roving mic. Do you have a question for Mr. Kirinya? What did you hear? What stood out? What new thing did you hear? Do you have a mic, please? Any new information? Show of hand. At the corner. Yes, please.
Yeah, thank you. Yeah, I had something new today.
Mhm.
The last part, Dennis Chalo from the Aspen Network of Development Entrepreneurs, that's Andy. So the de-risking part is something new that I had today. I've always heard of de-risking from the perspective of putting together funds so that they act as collateral, especially for small and growing businesses. But his aspect of de-risking is whereby they are creating valid businesses, whereby they understand their product, they understand the services they are offering, and they are also able to ensure that they withstand competition. So that's a very nice way of de-risking the SMEs. So that's something new I've learned today. Thank you.
Okay, I really liked the word de-risking. I have to use it this week. New vocabulary of the week. We want to welcome the people in the tent. We see you. Please, what did you hear from the report? What new thing did you hear? Do you have a question for Kirinya? Anybody? At the tent? Any new information you have heard in the room? Yes, a mic for the gentleman there in a blue sweater, if you could introduce yourself.
Good morning. My name is Manasseh. I represent Development Partners. And something that I've heard today that's got my attention is about debt restructuring. How many businesses out there are burdened with debt that they don't need or debt that they just don't know how to manage? And that is something that I think Wylde is doing well to support organizations or businesses to restructure those debts. I've met a few SMEs, and the worst thing you hear is that they have loans, bank loans, loans from partners and others, and they're still languishing in that space where they don't know what to do when they need more money. So they still need more money. They have debt, and they don't know what to do with that. So I think restructuring debt would really offer a way out of.
Okay, restructuring debt, I think that's also refinancing. Have my terminologies right? If I have my terminologies right, so you have debt as an SME, yet you need more financing. Are you going to refinance? How do you manage debt? How do you ensure you're running profitably? And how do you ensure you're servicing your loan? Because it keeps a record for you to get additional funding. Thank you very much. Do we have somebody from the crowd from the tent?
Yes, good morning. My name is Wamboi Gashiengo Nyabero. And first I apologize because I came in late. You may already have talked about this, but I am curious about what we are thinking about the gender lens in terms of SME funding. And if you already talked about this before I got in, I do apologize.
Please explain gender lens.
So how are we doing in terms of funding women who are running SMEs as compared to men who are running SMEs?
Okay, I hope the financiers here have heard that. What are we doing to support women entrepreneurs? As you know, the women support their, they say about 90% of women's finances go back into the household. So there's an important, my mic, it's important to have women supported, and we also have the 2/3 rule now that we need to observe. So, Mr. Kirinya, do you want to respond to that? Do you want to respond to any of the comments that has been said? Okay, he'll take the last one. Do we have one more comment? In the tent, inside the room. What did you hear? What was a highlight for you? What was an aha moment for you from the report? Okay, you want to respond to any one of those?
Okay, let me respond to the last question, and thank you very much for your comments, Manasseh, and I think you said Dennis? Dennis from Andy, yes. So, one thing about small and medium enterprises in Kenya, and this was a research that was done in 2016, is that our SME space is very gendered. What does that mean? It means that the majority of registered businesses, and at that time there were about 1.6 million in 2018, are male-owned. Only about 38% are female-owned. Now, that's one aspect that we need to take into account. Of course, you won't find it in the report because we are not focusing on that. The second thing that you need to take into account is when you move lower down, like micro enterprises, is about 65% of them are women-owned, and they have turnovers of about 50,000 shillings and less per year. So the further down you move into the SME space, the more gendered it becomes, and the more you end up dealing with women. So her question is actually very, very valid. Now, unfortunately as well, we are not financiers, but I can speak to the situation. It is very, very important for us to think through how we can support women entrepreneurs, especially further down the micro sector. Because most of those women entrepreneurs who are further down are what we call necessity entrepreneurs. They do it pretty much for survival. So it's a very, very important thing for money to flow in that space. But again, I must tag back to what I said. It's one thing to be funded because you're a woman, and it's another thing to be funded because you're a woman who has a valid business model. Because when we send funding to invalid business models, we are actually wasting resources, whether it's male or female. And those resources would have been used to fund valid businesses, whether they're male or female. But it is our position as well that funding should be able to move more and more towards the gender space. Then again, if you're working in a country like Kenya, you know that the collateral is owned by the men, but the women are the ones who do the business, especially in rural Kenya. So I'm in agreement. Money needs to move to, money also needs to reflect the gendered nature of the Kenyan SME space. Thank you very much.
Okay, thank you so much, Kirinya. I hope you've heard. I hope you're getting excited. We'd like to go into a time where we hear stories from actual SMEs on does this thing really work? Where did they get funding? How did they prepare their SMEs for funding? And how has it helped scale their business? So to do that, we are going to have a panel, and I'm going to invite Mr. Njoroge Kibutu. He's a financial consultant with 20 years experience working with large international financial institutions and SMEs. He's a financial expert that uses a data-driven approach to find solutions for various organizational issues. He has combined his knowledge in software development, database management, and financial planning and management to help SMEs develop financial models that are easy to understand and quickly adopted. As a financial expert, he has a passion of creating wealth by working with business owners to achieve their objectives faster. Welcome, Mr. Njoroge Kibutu. He will be your moderator for the panel, and Sam, you could just take a seat. Karibu sana. And assisting Njoroge is Lucy Njeri. Our paths keep crossing with Lucy. I seem to think I have left her behind, and then our paths meet. So Lucy is a project manager for Wylde. She's seasoned and a value-driven executive leader with over 10 years multidisciplinary experience in human capital operations. She has a global multicultural business outlook, having worked in the educational sector serving corporate institutions in the executive education department. She oversaw revenue growth, regional expansion in the East African region and the continent, and international into West Africa and Europe. Karibu sana Lucy. She will be the moderator and she'll be introducing the panelists. Do we have one more person? Or they'll find us going on, yeah? Okay, so maybe one of you could sit there just to fill the space. Yeah. The lady. So we really want to hear what are the practical tips. Unajua, they say the on the ground mambo ni different. So we could be saying, oh, there's access to financing, but how is it done? So welcome, Njoroge and Lucy, over to you.
Thank you very much, Wangeshi. Thank you to Chris and Kirenya for getting us started. A big welcome to our panelists. Karibuni sana. Help us demystify this aspect of money, pesa, whatever language you want to mention it, because it is a key driver to the growth of our businesses. So how we shall structure our panel discussion, owing to the time, is that you introduce yourself and your business, and then there will be a question that follows along. Somehow it happens that I may start with the ladies, because they have a story to tell us. That story that Wangeshi is saying, mambo kwa ground, is different. So let me start with Maureen, and that is Mercy. You're Maureen, right? Thank you. So let me start with Maureen. And Maureen, as you speak to us about Nyayo Soko Moms, be brief about it. And then the question around there is, what led to your decision to decide to seek funding?
I hope, is this clear? Okay. My name is Maureen Amakabane, and I'm the founder of Nyayo Moms Sokos. Not Nyayo Sokos Moms, Nyayo Moms Sokos. And what inspired me to register it, because I'd been running it informally from 2013 as a community. And then in 2019, I decided to formalize it. So that means going to register it and monetize and put a business structure around it. So for me, I think it's accumulation of my experience as a businesswoman and trying to access funding, because I have other startups, and one is in sanitation, and it's capital intensive business. And when I exited formal employment, I had good savings. And then I thought, oh, since I have money, let me go into business. Then I like to say that in my first year of business, nilosho na mosho moja. You know, like all my 10 years of working, because I started working pretty early and I didn't have such high expenses, so I'd done some good savings. And I brought in people to do the business, it went south, I lost money, and then I took a back step and I decided to understand, what does it take to run a business? What does it look like? What does financing look like? Because then I realized, other than the money and the savings that I had, I needed more money. So that's a business that I've parked as I trying to access funding, and of course the things that you're saying, access to collateral, access to commercial loans, access to, you know, the day-to-day operations of the business. I think that for me is what led me to really put Nyayo Moms together, which is a business that I had, you know, it had grown organically. Like I said, I had been running it as a Facebook community group, and there were many small businesses for women that were thriving, you know, in that ecosystem. So I thought, hey, why can't we put business structures in place and create access to markets for these micro and SMEs, for women-led businesses? And then, of course, eventually, like he said, and I've been digging deeper into understanding the bigger problem. And it's actually around, you're right, 9 out of 10 businesses that are run by women continue to operate at micro level. And they either shut down or they face other adversities. But if these businesses then are subjected to the critical success factors, I think they can be successful. So pretty much I think that's where I envision Nyayo Moms will be in the next 5 to 10 years, supporting and working with small businesses that are women-led, for them to understand what are they doing, what problem are they solving, and I strongly believe the business is sustainable. Yeah.
Thank you. Thank you very much, Maureen. Mercy, over to you. Uzuri Institute, what is it in brief? And then for you, what concerns did you have at the point that you were fundraising? Were they assuaged, or how did you deal with them?
Okay. Hello, everybody. And I apologize for lateness. I operate this business in Thika called Uzuri Institute. And it's not a young business. I can call it apparent because it is busy birthing other campuses. And we primarily are a vocational institute where we are powering employability and vocational prosperity. We want the graduates who come from Form 4 and go through college to be very employable, because many of them, they go through college and they get into the workspace and they have no clue what work looks like. So we prepare them and transition them to work, and that's not a very easy thing. Because of the journeys young people go through in school, parenting and all that, it actually doesn't prepare them for the workplace. In fact, it prepares them. It takes them back. There used to be mommy's boy, mommy's girl, and they come to the workplace and they think the boss is mommy, and it doesn't work that way. So Uzuri Institute, I founded Uzuri Institute, just organically with a little bit of money from friends and family, not friends, from family, and small businesses I was doing. I was doing outside catering, I was doing stationery, and then, clothes. And then finally, I landed into this education sector. I think that's where I got the satisfaction. And as I grew the business, in those days, it was pretty hard to come across financing. And I remember my first attempt to have a sizable loan, which was about 15 million shillings, was really a headache. And I went around looking for money. And I was not married, and that was a big deal. So I specifically went to several banks, and they kept pushing me off until one day, one of the bank managers just whispered to me, "Mercy, you're going to need a husband." And I considered. I even approached a friend. Like, can you pose? Can you pose and just be my husband, etc.? Then I thought, what the heck am I doing? Let me go by faith. And I did go by faith. And the money came through eventually. And I want to just say this, that banks are our friends, okay? But they are more friendly to collateral. So I have found that early on in business as an entrepreneur, part of your strategic plan, put collateral there as a key aspect. And go to the same banks, let them buy you that collateral and that property, because you're going to need it. Once I did that, at a point where you're buying a property for about 15 million, that's like 10, 12 years ago, it has already grown to over 100 million in terms of worth. So now I walk into the bank and they have no issues. Okay? I walk into the bank, they have no issues. They are my friend. You can make a phone call and get the money. Why? Collateral. So, to demystify this collateral business, I would say put it in your strategic plan. Just get it done early on in the business. Get the same bank to buy you a piece of land that you will keep using. You'll keep taking back for the money you need to do bigger things. Because this is the reality, that many times you'll be given kidogo money. You want 20 million, they want to give you 3. And you're like, 3 will not help me. 5 will not even help me. 7 will not help me where I'm at. I still want 20. So you put up, just go to the bank, tell them, buy me this property. I mean, start early, put it in your strategic plan, and that becomes your form of financing from then on, like forever. So I celebrate having done that early, about the 5th year of business, and that was the financing I was looking for. And at least now, even though I'm married now, they don't ask for my husband. they already have a document in there, and they smile on you every time you walk into the bank because they're holding some huge. In fact, they start telling you, tomorrow, you don't want 40. You're like, no, business is a little young for 40. I don't want 40 right now. But generally, I think the plan is to put in collateral in your strategic plan. Don't overlook it as you do business. Make it a prime thing in your strategic plan because you're in the years to come. And that's what I'm enjoying now. Thank you.
Thank you. Thank you. Demystify that. I am near someone with a mic, or is it someone with Dr. Shiko? Welcome. I'm hoping, okay, let me put it right there. All right, so as long as you can hear me. Dr. Shiko, most welcome. So you give us a brief introduction of yourself as pertains to your business. And for us, tell us, when you were looking for funding, did you have what do I call it, qualifications of who or what kind of an investor you were looking for?
Thank you so much. I'm sorry I was late. As an entrepreneur, you have to pick meetings, even in the middle of a panel, so I'm going to do this and sneak out again. So I'm Shiko Gitao. You can hear me? Okay, I'm Shiko Gitao. I'm the CEO of Kala. We are a digital innovation lab. Our goal is to catalyze Africa's digital future. We're looking for money. Hey, I have a book to write. We started with a very clear investment thesis. We were very clear on the people that we want, because the kind of fund we are looking for is very different from a normal VC fund. We are looking for fund to other people. And we were very clear we needed an investor who is going to be patient with us. So it's a 10 to 15 year relationship we are looking for. It's not a 2-3 years, then you get out of the relationship. So we are looking for this long-term relationship. They have to be very, very patient with you. They have to understand this is Africa. So while in the US they say there's that 2.5, maybe 5% success rate, ours might be a little bit lower or a little bit higher depending on where you're investing at. So we were very clear we needed somebody who is patient, somebody who is invested in Africa beyond the bottom line, the impact. So because our thesis is we want to be able to create 1 million jobs in 10 years. So if we are looking at that, we need somebody who is aligned to that kind of thinking. And number 3, we needed somebody who is not obsessed with, like, who is not going to be looking at a micromanager, because you get people who are like, can you send me a report every 2 weeks? No, we wanted somebody who's going to give us room to experiment and grow. And getting that is, I say this is where all the degrees came to roast, because it's, you do this research, you sit down and say, I'm looking for this kind of investor, do they exist? And you get 2 or 3 people who actually match almost word for word. There's one, it was so weird because when I talked to somebody, this is the kind of person I'm meeting, I said, they told me, go to this website. It was very weird. They matched word for word what we are looking for. And then from there, you start having this dating relationship with these investors, because it doesn't happen on the first day or 2 or 3. You start having this dating relationship with them to understanding. You remember you're in the middle of the globe. Let's say Africa is the middle of the globe, and then you're in Kenya, you're in the middle of Africa. So you're this weird person that they may not trust. So you have to show them that they can trust you. And I always say I have the triple minority thing. So I am Black African woman, which is like, and you can take it personally, and sometimes it does hurt. But most of the time you say, I understand a majority of our population because I make a majority of our population. And once you flip the script that way, so when you're talking about anything about Africa, anything about females, and everything about being Black, I actually understand that from a lived-in experience. So when you have that and you have to match those relationships with that, and it's okay to walk away from an investor. It is hard, but it's okay to say, no, we can't, this is not working. We like you, we'll keep you in our updates, but we will just keep you in our updates. Yes.
So I have a question for Marcy and Wylde. Your story is really amazing.
Let's just say that for many of us entrepreneurs, we are a little bit, you want that baby as your own. You don't want all these people coming to tell you how to run it, equity, I don't know what, equity financing, story. I'm an entrepreneur, period. And I want to get where I'm going. So what I did was approach just the kawaida banks. The kawaida banks, and they were the ones giving me a lot of trouble, but they don't anymore. I think they have improved, and they are good people nowadays. But still, you have the issue of, so now you have collateral, and it's the bank that helped you, and they are very happy to have done that, and you're also happy. Now, in fact, the issue is, where do you get cheap money? So you still have to come out and start looking. I was asking Chris the other day, who is giving cheap money? You know, someone like Kedo 6%, or 5%. That's now where we want to be, because it's become very, very expensive to borrow. So even though you have that collateral, you keep it there, and you don't want to borrow, because when you calculate, my friend, you will be giving up your whole business, your whole life, and your whole, the next 50 years. So now looking for cheap money is now where we are at. So, it's now the next struggle. But yes, looking for money, keeping those books correctly, because they have to be kept well, is very key. Just putting in the systems and building what you want to see in your business, as opposed to complaining. Okay, as opposed to complaining, we build what we want to see in the business. And when you go to the bank, then you show that track record. It's necessary. You can't keep money in your handbag and go to the bank. It has to pass through the bank. Yeah.
Yes, I did explore commercial banks, and my experience was a bit different. I was young, and I didn't have collateral, but I had access to a family property that have given me collateral. But when I went to this specific bank, which my mom had banked for over 30 years, and she was going to, kunisimamia. So she had this collateral, and she said, hey, you can use it, because she had seen my struggles. And I remember the bank outrightly asking, are you an only sibling, or do you have brothers? And they were very clear that if my mom was going to use that collateral and I have brothers, then they have to step up. And I found that a bit twisted, because this is my mom's property. And anyway, so later on I did the mathematics. I looked, because the value of the property, I was looking for around 20 million, and that property could have actually given us that amount. But then when I did the calculations, I was like, I don't think I want to risk the family. And then it wasn't patient capital, because you get the money today. I was shipping in the product, of course, 90 days, and then you start trading, So when I did the mathematics, fortunately for me, I did that maths in advance, and I was like, hey, it doesn't make sense. I don't think I want to have this kind of pressure. So then at the time, like I said, I'd already lost money. I'd brought in 2 other local investors into the business, and I already had very bad experiences. So I took a step back, and then one time I got my friends sent me a link to this accelerator program that an African philanthropist from Nigeria runs, and I did the application, and that's Tony Lumelu. So I did the application, and there was a promise of getting a $5,000 USD, but after training. So for me, I went through the training, and then I had access to this grant that I put into the business, but it was very insignificant. However, it made me do a very thorough market research that is bankable. So when I say that I've packed the business, I've packed it knowing that even in the next 2 years, I can still go back and revisit it. So then when I started Nyaya Moms, which brings the other thing that you've said, which is very valid, how do you keep your records? So sometime last year, the foundation sent out another application that they had gotten partners who are funding women businesses. And I looked at Usafi Sanitation and I said it's not valid. And I wrote to the foundation, I said, hey, I know I went through this program using Usafi Sanitation. However, I want to apply with a new business that I'm trying. And they said, okay, please give us an account of how you spent the previous money. So I was able to actually account for it dollar for dollar. And they said, great, give it a try. So I applied for this particular second opportunity as a grant. And, so we recently got the first 10,000 euros and you're going to get the next 50,000 euros in terms of grants. And grants are actually, it's patient, it's easy, it's non-refundable. So I think for me, it's given me the opportunity to start exploring grants. How do they work? And I think to the small businesses that are listening, do a till number. You can't put money in your bank, in your handbag, and then expect to go and even negotiate with an investor. So separate your money from the business, be accountable. I have other directors in Nyaya Moms. We're not on a salary, we are on retainer. It's as little as 15,000 shillings, by the way, per month. We started at 5,000, then 10,000, then 15,000. And times you're like, hey, you've gotten $10,000, and you start getting ideas. People start telling you, tafuta kalon uchukue. So don't get into that trap of trying to take money and tying it in property, especially if it's grant money. So I took the grant approach and the grant direction, and I think it's been able to open up for me other opportunities which are now coming up. Yeah.
So I have a question for you, Dr. Shiko, before we move on to Sam. When you talk to, I think you just mentioned that you talked to VCs. You met with VCs. What was your experience like, and how many of them, how much of that money did you turn down? Because you said not all money is good money. How many times did you turn down money, and how many of them did you actually workable partnership?
So I think 30% we turned down.
30%.
Yes. Because before last month, there was a huge hype around investing in Africa. So a lot of people are interested in investing in Africa, but you have to be very principled from your point of view, and maybe it's just me, I'm a lobbyist, they're called activist, all sorts of things for Africa. You can get that money, but at the bottom of it, is it going to help Africa really? Yeah. So you have to balance those things. So you talk to hundreds of people, and then you listen to them and saying, I know that one, apana. Yeah, and you continue talking to me. We've not closed our round yet, but we are very clear on what we are looking for. And there are people who are just nice to have in a list of people you'll be sending emails to, but there are people who you continue having good conversations with. They are very helpful and continuously helpful. And that has been my experience. It is, and I hear her when she says she's going to a commercial bank and you're an entrepreneur, it's my business. I think one of these things I learned is sometimes you just open your hand and let go, so that you can, when your hand is open, you can get a little bit more and scale faster. Because we did try go the commercial bank way, but it just didn't make economic sense, because it is really hard raising money, especially when you ask us, you're not selling commodities. I'm not like Maureen who will say, "Ndio easy stock." So when you show somebody software, first of all, the guy at the bank is looking at you like, what exactly do you do again? And you try and explain, they say, you can't touch it, so we can't sell it. So there's nothing that they can attach. They don't care about, like we spoke about IP with this bank. They say, that is not tangible in Kenya. So it is hard, and I keep saying we need a big, please, Sam, exit quickly. No, get a big egg, get it exit, so that people can believe that software actually there is money. Because until we get that big exit on this market, those of us who deal in software will just go and open our hand and let go of some of what we have and accept some.
Thank you. Maybe that's a good transition to talk to Sam. Tell us about yourself and your business.
Good morning. My name is Sam Gishuru. I have never received any funding. This is where you say, I've never received any loan. This is where you say, welcome, Sam. Because we sound like we are a group of AA people, Alcoholic Anonymous, who've been rejected by banks. You know, so I'm one of those business people who can say I probably started a chicken farm with a feather, but I've never received a loan. I've never taken a loan. I was rejected, no collateral. Told me nothing. I've never received a grant as well, so I've seen the reporter's grant offering, so I may not have a lot to speak about that. Unlike popular opinion that we've received grants from government, most of the work we've done is contract. My background is I've been in tech for 21 years, initially working for internet service providers. We were the initial guys who do installations for dial-ups and just making internet accessible. I built a couple of companies, NILAB. NILAB is currently an accelerator that supports entrepreneurs. What we do is we just help access to funding, and we also help you with knowledge. So this year, the last 6 months, we just funded 10 businesses to the tune of 10 million shillings each. So 100 million, working with the German government. So what we do is we look for partners who want to deploy capital to the kind of business we're discussing. But mostly we focus on startups. For me, which there's a very distinct difference between what a startup is and what an SME is. Kuhasol is the other business, and what it does is it's an online platform that helps facilitate get jobs for young people. We currently have close to 60,000 freelancers on the platform, probably one of the biggest local platforms considering all the others that were actually funded to millions of dollars have shut down, like Link and others. Currently, I'm a headmaster. That's my nickname nowadays, but I don't teach. I'm a software person. I'm running a school called Kidato. We are 17 months old. As a school, we have a campus we're launching in the next two to 3 weeks at Lavington. It's a STEM center for children. So basically take the NILAB concept of giving people a place where they can learn comfortably. So we have a STEM center, it's an art center as well. We have chemistry, physics, and biology labs there. But our entire school right now is run online. We have from year 1 to year 9, having year 10 in September. We teach the British curriculum. We're literally 30 to 50% cheaper than any international school. A lot of people ask, how does an online school work? Basically, just to brief you on that, if you're a parent, when you join our school, we give you a free laptop, we give you books. Classes start at 8:30, 45 minutes classes, 15-minute breaks, the usual 10 o'clock break, lunchtime break. Classes end at 2:30, and then we have social activities that we plug in so we can connect parents to a football club, soccer, swimming, golf, whatever your kid is excited about. Our class sizes are very small. It's a ratio of 1 to 5 students. So literally, it's a dining room conversation where your child gets full attention. We're able to accept kids who are autistic, who have ADHD on that particular spectrum because of the small class sizes. So, you can take out a breakout room with a child who's lagging behind him. The child is really fast. They are allowed to proceed and go ahead. So in the last 17 months, we've done our first international exams as well, which is the Cambridge exams, which is amazing. This exam allows you to, it's a IGC exams. It allows a child to go to probably almost any university in the world. We also offer what we call after-school classes. What that happens is that after 2:30 to 3:30, your child can take a cooking class to learn how to cook chapati, or they can take a coding class. We just partnered with Kondigal in India to provide certifications. And they can take a chess class. Chess is extremely good for logical thinking and just for strategy. Software is good for logic. Chess is good for strategy for children. They start thinking better about the next move they're making. We have an art class. We have a passionate children about art. We have some event called Art in the Wylde, where kids go to Karura on a Saturday and they just paint with Mr. Sketch. Upwards of about 2,000 kids right now on the after-school classes. We are hoping that this school expands across the continent. We have about students from about 10 countries currently doing after-school classes, but fewer out of the country doing the main academy. We are funded We raised upwards of $2 million last year. So I'm able to, I was able to fundraise for this. We have some very good investors, including an Ivy League university. So other than that, I could take a question. Yes.
Most businesses just aspire to have a conversation about getting funding. $2 million worth of funding, that's pretty amazing. It's good money, right? So, I mean, you've heard Dr. Shiko talk about 30% of the funds or the offer she got, she rejected. From your experience, what would be the reasons for you to say no to money?
Well, if you're a Russian mafia mob, I'll say no. And that sounds like a joke, but it's a serious thing. When you clean up money in Eastern now, where place to pay that money, it's in emerging markets like ours. So whoever you're taking money from. So maybe basically the best way to answer this question is, how do you have a conversation with an investor? So when I was fundraising, first I fundraised from Y Combinator last year, that was about $125,000. Now they're giving $500,000 on entrance. Actually, just yesterday, one of my other startup, which I was working with the last 2 weeks, just received $500,000. And this doesn't require them to even have traction. I think they're having less than $5,000 on MRR. So the question for investors becomes, he's an investor, the investors, they call me and they say, hey, Sam, we're interested in your business. I say, okay, fine, that's great, let's jump on a call. They'll say, hey, send me a pitch deck. I'll say, okay, fine, I'll send a pitch deck the day before. I won't send them a week so that they evaluate and they have 1,000,001 unnecessary questionnaire. I probably will send it 2 hours before the meeting. So we kind of are focused on what I want to have, because it's 10 slides with one item on every slide. But the first question from you, the investor, is, are you an associate or your partner? As a fundraiser, you don't want to talk to a lot of associates. They are salespeople. They're looking for deals, present. There's an IC committee for them to make decisions. So from a startup perspective, we're always encouraging startups, speak to a partner. But then the first question, then you're going to ask them, the second question, invested in my vertical. I mean, I'm in education right now. If they say no, okay, then have you invested in Africa? If they say no, then I realize they're just collecting data. Say, so what's your interest in your first investment in an African company? Why are you finding this exciting? So I am not the one being interviewed. I'm interviewing first. You know, how did you raise your money? Where did you make your money from? If you're an individual angel investor, I mean, ini pesa ya COVID ama ini pesa. We raise our money from, you know, Jack or entrepreneurs who have extra cash. We've put there. We have a capital base of $10 million. We want to deploy at least $1 million this year. So I'll ask questions like, how many companies have you invested in this year, or what's your thematic areas of investment? So when you interview an investor, then you're able to establish, are we aligned? Are we not aligned? You know, ask which are the, can you refer me to 2 or 3 founders you've worked with, so that I can actually just have a chat to understand the experience. I don't want an investor who puts $10,000 and comes and asks for a board seat. You know, I don't want an investor who wants weekly reports, or he's always checking on me like we're best friends from high school. We are not. We're in business here. I give you a piece of my company, you give me money, and I either do monthly investor reports or quarterly reports. So they're all things you want to pick up before you engage. But of course, what this is doing for you, it's also projecting a lot of confidence. It's telling the investors, I know what I'm doing. I know the kind of investor I'm looking for. I'm also vetting every other person who's going to be on my cap table with you. So if you're in my cap table, you will not wake up tomorrow morning and hear, hey, I've been arrested because I took the money that came from whatever. So basically, for you to reject, you need knowledge. And the knowledge you need is to ask the right question. And then you can let the investor now ask you the questions and then move ahead. So for my fundraising, I had a total of, I think, 78 investors in a span of a month. This is a really hard thing mentally for you as a founder, as a business person, because if you're dealing with investors in America and you have 30 days and you have 70 investors, means your phone calls start at 9 o'clock and end at 3 in the morning, you know, and then you still have to wake up and prove that your business is still growing, because the next other week you have to, the investor you talked to 2 weeks ago, you want to come back and say, oh, that week our revenue was at $100,000, whatever, now it's 120, or whatever the number you want to play with, you know, or you not play with, but actual honest number. So it's a very hard, when you start fundraising from an investor, it's really difficult. And then you're repeating the same conversation 70 times. You know, we are a school, we do this, every single day to 3 people, every single day to 3 people. By the time you've done this for 7 days, you want to insult somebody. Yeah. Yeah. So, and then you know, of course, the other challenge on that particular part of choosing investors is arrogance. Unfortunately, to say, people in the West are very arrogant about Africa. You know, they still like, well, internet access, power problems, and then you know you just have to tell them we have better internet in Nairobi than you have in San Francisco, New York, and it's cheaper actually here than it is there. If you have actually been there, you realize that they give you a 4G connection, and then when you run out, they downgrade you to 3G, and it's pain. I forgot.
No, I think you've clarified it.
Fine, I'm glad.
It's just I mean that aspect, Sam, of saying that when you talk to an investor, be clear on what you want and get the right partner. I mean, that's what you're focused on, and that's really clear. So that reduces your rejection rate, because if you go into a conversation with somebody and you're interviewing them and not being on the receiving end of conversations, it puts you in a better place. So I think now, sure.
A quick. I invest in companies that are specifically startup, that are, you know, using software to scale. So I do checks of between 5,000 and 10,000, and I bring my friends along to do that. You have to understand the mind of an investor. If I am running a company as an investor, I'll come to 3 of them and they'll give me money. They have extra money. Take this money. I'll convince them with this money, instead of being in the bank, give it to me. We'll invest in amazing, innovative companies in emerging markets. When they give me $10 million and they say, we want you to deploy all of it, they literally want that money spent. So as an investor, I'm the one who's desperate. I'm the one who's looking for your business. So if you realize that that's the mind, because by the end of the day, if I'm not deploying the $10 million, they will not give me more money. So I have to, my KPIs is deploy the money, number 1. Number 2, deploy them in extremely good companies. So as an entrepreneur, when you sit on the other side, you always think you're the one begging. No, they can never tell you this, but they're the ones hoping and praying and rooting for you that you're going to be the right company, so that they don't have to talk to 100 more companies, so that they can present to the investment committee to make a decision. So when you get that mindset, because I've had people saying, I've had Ashiko, I think is the one who's just said here, that it's hard to say no to money. No, that money is looking for you. You may think you're the one looking for money, but that money is actually looking for you. The problem you might have is your business solid? You know, does it match? Are you making progress? Do you have traction? Actually, the only key thing that anybody would care about is, do you have traction? Are you actually are people buying? You know, some of these investors don't even care whether you're making a profit. So I think the switch of the mind is also extremely important. Yeah, thank you.
Thank you, Sam. And I think this will be a good transition to Ken. Ken, karibu sana. You've heard what the Wananchi have said about commercial banks. Majority of the experience has not been good. So what will you tell us about commercial banks that can put us at rest, knowing that you are actually doing business for us as SMEs?
Great. First, I'll pick it up. Chris, this is a very nice interaction session. And every time that I play party to it, I learn a few things. I did not know that banks are asking people to come with their husbands and get married. I've also want to pull Sam on the side and ask him, what's the difference between startups and SMEs? Because I happen to fall into one. And for me, I thought with startups is basically you dress to your comfort. You have breakout areas and you have a very fancy working environment, different from my environment. Whereby if anybody sees me with a can and it has a Heineken with it at work, that is integrity issues, and I have to be in a different sitting area anyway. So Ken, head of branches with Rafiki Microfinance. The institution has been in the market for the last 11 years, and we actually thrive in the space of SME, micro SMEs. So to give feedback to your question, I'll actually help also to unpack the responsibilities. I don't know why we are losing coverage on the map. Sorry, CBK has been quite deliberate and intentional on the regulatory frameworks of financial institutions. I'll start with the microfinance. Why do we exist? basically, we are supposed to be taking care of the developing markets, the SMEs, the hustlers. We've had different kind of names of anybody who is starting up something. So how am I actually regulated to make sure that I do not compete with commercial banks? And I also have a responsibility to make sure the people in the room who are our targeted audience basically grow up the ladder, and after some time, you will actually move all the way to masses capacity, so that a bank is smiling to you. I know it has been a notion that SMEs are not actually attractable to be smiled upon, but could it be, first of all, we are playing in the wrong field? You do not go to Citibank, New York to ask for an SME loan. They'll not even listen to you at the end of the day. So this is why I'm basically coming into what is the framework and what is the CBK's responsibility to make sure that everybody in the market is taken care of. In one place that we are basically given very clear demarcations is on the single obliga that we are supposed to give per customer. For commercial banks, it's been pegged at 25% of the core capital. So you find a nice bank that has almost 60 billion as a core capital, so then we can give per individual 25% of that. When it comes to a microfinance, if a microfinance has 60 billion as a core capital, then we are actually allowed to give per individual 5%. You'll ask me, why is there a margin of 20%? And this is why we need to be very deliberate on what we're really doing to our markets, so that I can actually thrive with you in the space of the 5% core capital, push you up the ladder up to a position that you can take 25% of the core capital. Then I have a responsibility to offload you to a commercial bank. So even in our framework, we have basically been put in place so that we can prepare people to go to commercial banks. It's supposed not to be a competition, but a complementary kind of engagement first. But do we have challenges when we are actually dealing with our market? Yes. Remember, this is why we are not regulated as a microfinance, so that we are not lending at 14% and we've been left in an open field to go all the way to 23%. Our risk acceptance criteria is a little bit high because we are also dealing with now the challenges that we are talking about. So I'll basically also touch on the challenges that are facing SMEs. SMEs are struggling through, and this is what now Chris and your able parties and partners are actually doing. Creating the concept is becoming a problem. Indeed, everybody, and I always say, you know, from where I sit, right from when I was a direct sales, up the ladder until now, at least I'm heading a department, I've listened to so many entrepreneurial minds. And nobody thinks that they are starting a business to fail. So you sit and listen to customers wamuliza, hey, na hii unasema watanunua wapi? Ah, hii. Ni nini tu hamuoni, but the guy himself has the vision holder, powerful. But how are we putting these concepts together? Something that is called strategy. Does your business have a strategy? Does it move to a critical success factor? What are you pushing? Because indeed, everybody is coming up with a concept. But trust you me, and I can give this feedback candidly because I'm also talking to my customers. Some of them are chasing the wind. So how do you actually put them together? Not everything is actually a battlefront for you. So we also want to see, and this is why we're in this forum, to connect the dots. Can, first of all, the person who is helping you write your paper see your need? What are you solving in the market? Because that is the only way you'll sustain. That is the only way you'll create the market relevance. The other issue is, how are you actually putting your critical success factors? What is the goal of your institution to the market? What should it actually be for tackling first? Is it resourcing? Do you need very AAA kind of engagement? Is it hospitality? Definitely that needs to come with a certain caliber of staff that you need to have with you on board. The next issue is, what is your growth trajectory? Where do you want to see? And I like something that has been mentioned on. Indeed, banks are, let me tell you something funny about banks. They'll tell you to come with your husband. But we really fear something that we call matrimonial property. So you wonder, I was supposed to get a husband. And when we go and get the property, then it becomes also a high risk because you cannot evict me from my matrimonial property. So in most cases, we are even saying the property that you have, you and your wife joint names, it's a problematic title. So we do not even actually prefer it. So what are banks saying in the long and the short? It sounds more sense, right? And I would wish to move the mind shift now to, and we are structuring your business now, whereby we are saying if all these documents should come into order, whereby we started with a strategy, this is who I am. These are my CSFs. This is what I'm actually working as a concept in the market. The next thing is, I have cash flows. Money comes in. I'm happy to hear guys say that they actually don't need to be funded. Why? Because the understanding basically, some that you're saying is, there are some cash flows that you could see, that you could project, that you could see how you can enhance. Any business should start with something. We all know that capital sourcing should be somewhere, but where are those cash flows coming from? The challenges with SMEs currently is we do not know how to match our revenue with the collection points so that indeed you are getting paid. Na wengi wenyu najua mnasemanga the fastest. Niweke kwa M-Pesa. Sasa ikiwekwa kwa M-Pesa inakuwa ni yako. Ukipita town unaona kabisa hata sikuwa nahitaji kiatu lakini sina pesa kwa M-Pesa. Then you start becoming a drawer. Drawings are much more higher than even the payments. So it becomes a problem. All the income for all the revenue for the business is actually going to enrich the director and not the business needs. So what are the operational expenses? And especially for ladies, I think now in town there's so many guys who are doing nails that you can even do one here, ukienda hapa pengine unaambiwa clerics are not in good in order, wacha tutoe tuweke ingine. So impulse buying becomes an aspect because you are highly liquid. Restrict your liquidity because it does not belong to you, it belongs to the business. If we actually understand that concept, then we'll make sure that we have structures that can interpret business revenues. Ultimately now that is where I'm moving to why the bank and how should you feel empowered to move to the bank. If you've actually gotten those concepts right, definitely at this point you can basically see, even with my M-Pesa, it does not come to my line, it goes to my PIL number. We also have solutions of LNM, Lipa na M-Pesa, that actually offsets to your account. So at the end of the month, you're in a position to print something that is telling you, wachana ile ingine yenye unajidanganyanga. Sorry for my words, if actually they are reaching to someone outside there. Kuna kujidanganya, you know, with my business being the CEO, I make money. But from your statements, can you basically see how much you basically make? And at SME levels, we are not even asking for you to go and get PwC as the auditors. We are only asking you to show us your statement, and in a month we can basically say what is the retention, what is the inflows, what is the average turnovers. That is what the bank is looking for. And I would tell you, the bank is actually, the narratives are basically shifting because we have 46 banks in Kenya currently, serving a population of almost 50 million people. We are basically saying 1 million guys can go at the corner here and agree that they are going to a bank in one bank, and they'll actually fit in and we can take care of our whole population. Then we have 117 credit onlys. Then we have 14 microfinances regulated like Rafiki now. So in that all competition, and this is why we are here, and Chris, we need to have more of this. We need to ask ourselves, why are we not channeling in if we have so much capacity, especially for financial inclusivity? So who is failing? One part I would say, Ken is failing as the banker here because we have stuck to something that you've called collateral. But remember, it is a euphoria kind of discussion, whereby even you as customers, your confidence has been built up because when you get a title, that is when you want to walk and bulldoze a discussion with your branch manager. Why don't you try that with your statement first? Why don't you try that with your bookkeeping? Why don't you try that with your records of what you've come up with? First of all, uendo ambie mtu, are you serious? You cannot see. This business does 30 million in a month. So who do you lend to? And in that place, you can even complain to CBK. Yeah? Uliza, I want to understand. What markets do you guys look for? Because if I have cash flows, then I should be getting a facility. So by this, I'm basically empowering the audience that you do not need security. Cash flow is king. Let us first of all understand we need to interpret our cash flows. We need to demonstrate it because from there is when we make risk acceptance criteria. Microfinance institutions now, when they exist, they are supposed to be looking at cash flow oriented businesses. So that the first conversation we are not having is, do you have a title? Because we do not lend to titles. Can I also tell you by the extension of what banks are struggling with now with these securities? For example, I'll not mention a bank. There's a bank that has bought a yard to go and place motor vehicles that they cannot sell. they repossess from people. There is a bank that has employed a realtor. Yeah? You have MySpace properties sitting in a bank as an employee. Just an example. I've only used MySpace because he's a good friend of mine. So you see, we are even going past our JDs to cure problems that we created by ourselves. My work is not to sell vehicles and cars. My work is to lend you money. So why are we moving to expand our territories so that we can start taking care of defaults? The mindset is wrong. Because we actually sold to security, we forgot cash flow was key. So now that we are left with security, we are not in a position to offset them. Then the issues of, can you get us also another security? Have you had cases in the market whereby we sold your property and you're still asking for something else? Yes? Yes. The conversation is no longer about security. So let us kill the discussion about security in banks, including between you and your relationship manager starting from tomorrow. But prepare for this battle with cash flows. That is what I'll be looking for at Rafiki. And do we have unsecured loans? Ultimately, yes. The only challenge with these unsecured loans is the structural interpretation of these businesses is what is missing out. So we'll also be looking forward to have capacity building into the aspects of how do your businesses sit in bookkeeping. That is a game changer for us. Let me also shift the gradient further. We have very many tech startups that are actually working on intellectual property. CBK is actually very passionate in converting intellectual property as part of the collateral. So that you patent your idea, then you can come with it and say, look, I'm the person who came up with Glovo, and from that, you can actually hold me accountable that all payments for Glovo will be ring-fenced to your financial institution, and through that, we can get collateral. You can see we are slowly moving from the hardcore places of, can you bring your grandmother's, your father's, your own, or anybody else's title? We are no longer interested in these titles. They are not working for banks. And you can actually dictate this market. Because we create these solutions at Wylde and interactive sessions. We are empowered, then we can move in a better state. I hope I've covered the ground. Thank you very much.
Thank you, Ken. I think that was really well put. And I think when I Meskia, Ken is giving money. He's got a lot of money to give, and I think that's really amazing. And in the interest of time, I think we've run short of time. The information that we've been given here is really fantastic. I'd like to lead off with the ladies. Maybe you can leave one word of encouragement. Mercy, you talked about your experience. We'd like you to tell us one thing that you can encourage an entrepreneur, a startup, an SME from that perspective. Maureen, with you as well. Your experience with title deeds, opening up various companies, would be really great to hear from you. In that regard, what can you encourage aspiring SME owners and startups in terms of keeping the faith, keeping up? You guys have been in business quite some time. We want to hear, Mercy, from you, how to keep going until we can have 100 million shilling title and we walk into banks. Same thing with you, Sam. Maybe take a moment, encourage us, give us an option on how we can walk this right path to where we are accepting a $2 million opportunity to grow our various opportunities. So thank you, ladies and gentlemen, for coming through. Ken, tumeshukuru sana. We'll also ask you to give one word as we close. After this, we're going to allow the audience to ask questions directly, and we'll hand it back over to Wangeshi. But in closing, please give us 1 minute, and a word of encouragement to our various folks here.
Oh, thank you. Before I encourage you, I have learnt a lot. And lately, because as an entrepreneur, you keep learning, and of course, I have to encourage you to keep learning. I found that the general model we learnt in school concerning what entrepreneurship is, sell your products, find markets, you as the CEO, you are the everything. I think I want to add one more office to every entrepreneur, and that is fundraising as a key job. I think I want to shift from what I have been doing to just becoming a fundraiser, and you get to know people like Kina Ken, and they are just learn those ropes, because at the end of the day, we'll keep looking for financing and things like that. And if there is grants and cheaper money, how excellent and how exciting. So I want to encourage you guys that it works. Your idea is going to work. Just keep at it, and just keep, just operate like a builder. Just keep building what you want to see in the business. And, if you are building a house and there's no toilet, you don't complain there's no toilet, you build the toilet. So you just look at that business as something you're building long term, and it will pay back. It will pay back. If God is real indeed, and He is, then you find that there are blessings along the journey, and your work will pay off. Every seed put in, you're going to have a forest out of it. If you have that kind of a mindset, then you should be dealing with many forests all over the world at some point. As an entrepreneur, you have to think that one seed, forests. Thank you.
There's one thing that I learned. Okay, I've learned many things, but there's necessity entrepreneurs. So I think for me, it's what are your necessities? And because I run my businesses full time, but I still offer my critical skills to earn a living. So what do? I still use my sales and marketing knowledge and strategy, because that's what I do, and I've skilled myself in other skills. So I'm a gig worker. So I earn my 8 to 5 job as I build my businesses and I try and fundraising, because like Sam said, it's a full-time job. And then also sit with winners. The conversation is different. Interact with minds like Sam. I do sometimes run off some things of him, Kinashiko, and where are you? Where are you taking your mind? What conversations are you having with people? Because I think also the mind is a very critical tool. So for me, it was the mind shift and knowing that this is my reality and this is where I want to go, because I strongly believe that the future of Africa is in the hands of entrepreneurs. And then for women, what are you doing differently? Are we unlearning some of the things we were taught about money? When I was in campus, I used to sell bags. So when I look back, I was always a hustler. I remember there's a time I had so much money, and my mother and my auntie sat me down and said, "Si vizuri mwanamke kuzoea pesa." What are you learning? What are you unlearning about money? How are you looking at risk? And it was a family meeting was called, because where are you getting this money? And I was simply selling mutumba bags, buying them for 500 shillings and selling at 1,500 shillings or 2,000 shillings. It was as simple as that. So I had to slow down, but then I have also shifted my mindset in terms of understanding risk, taking bigger risks, and also just walking towards a place where I know things that are working for me. So there's a lot of also development money that is coming into women-led businesses, because the development world understands that instead of investing in NGOs, can you invest in women-led businesses? Because the problems they're trying to solve at social level, poverty problems that they're trying to solve, actually can be solved. Because when I earn, I'll pay school fees for my child, I'll pay my house girl, and my house girl will be able to educate their children. I'm going to pay my rent. Yeah, so I think for me it's that. So it's consistent conversation. Sit with winners, by the way. Trust me, the conversation is different. When you sit with people who have actually been there, don't be afraid to ask. And also don't nag them. Sometimes you call Shiko and Shiko says, "I only have 1 minute." 1 minute. And within 1 minute, we've discussed what we needed to discuss and we've moved on. Yeah? So thank you.
From my end, I only have one way to motivate. It's the one that I've actually known the best for the last 16 years that I've been a banker. Please take this number if you have your cash flows in order. 0721 108 923. I'll also actually hang around after the breakout session. I'm available for any one-on-ones, but if you have your cash flows in order, you should not actually be fearing to work to a financial institution. Sorry? The number again, yes. My motivation again, 0721 108 923. Ken Watitu is the name. Rafiki is the bank. Thank you very much.
So I'm an entrepreneur, so I see an opportunity for an extra minute. Can I grab it? Okay. But I'm going to first correct Ken, agree with him. We do wear comfortably. The only reason I wore this shirt is so that I don't look like an unwanted stepchild on the Instagram photos you guys are going to post. What I'll do with this a minute is that I will just allow me quickly to separate what an SME or a SME is and a startup. And I don't know if I can just get two names of ladies in the room. Just gonna only use them as example. Just give me your name. Nzilani? Julie. Okay. So for example, say Nzilani starts a nail shop, okay? And she runs it for a year, and she's doing very well. She's saying she's making 3 million shillings a month. So at the end of the year, she's making what? 36 million? And then other ladies notice how successful she is, and they open so many nail shops. For her, just because she started a nail shop, that is not a startup, just because it's new. Just because it's new, it's not a startup. So literally, me and Ken may look like we are like an angel investor, or the investors I work with may look like we're in the same WhatsApp group. We are not. We're not even in the same room. We're actually not even in the same building. Ken does something completely different from what investors do. So if Zilani goes to Ken, she can show that 6 million of revenue, one nail shop in Kilimani, and it's successful, and she's like, I want to open a second one. If she comes to me at 36 million, I'll be like, not really. Even if it's growing, I can see she's growing and she has opened even a second one and a third one within the year. I'll still not invest in that. So what was the other lady's name? Julie. So Julie walks up to me and says, hey Sam, have you noticed how many nail shops are in Nairobi? There are like 300 so far, and they are growing very fast because women are getting their nails done. And she says, you know what? These people don't have a booking platform, okay? So I want to build a booking platform and give to every single nail salon so that somebody can book their appointment and they can post their photos so that you can see the designs. Every one of these nail shops will pay me 10K a month because of this platform I'm building. But beyond that, I want to do something else. I want to get financing so that I can open the same type of nail shops, but I will not run them. The women who are out there who do nails can come and rent a seat for a day, okay, and pay me, say, a K. If they make 3K, they pay me a K, okay? Now, that one I'll finance. That's a startup. So literally, she's saying there's 300 companies that I can give a booking platform, and I can provide XYZ, and they're going to pay me about $100 a month. So how much money is she making at 10,000 shillings for 300? She's making 3 million in a month from all of them. The same amount of money Zilani is making in a month, okay? But as long as a new one opens up and there are 1,000 of them, she's tripled her money in a year, okay? So she's now making 10 million, close to 10 million shillings. And when she tells me there are about 20,000 women who do nails, and when she opens these small facilities, they can pay her 1,000 bob, and every facility is going to have 5 people, okay? And they pay 1,000 bob a day. Multiply that by, say, 30 working days. Are you seeing the numbers? That is super scalable. Within a year, Julie is literally, or within 2 years, she's literally bringing in close to 10, 20, 30 million. Zilani is still bringing 3 million. And if she's opened 5 of those shops, she's bringing 15 million. You see the difference. So the difference about a startup is scale. Ability to look at a business and decide, how can I just be able to how can I make money when I'm sleeping? Julie wakes up in the morning, by 11 o'clock, she has 50,000 in the bank, right? That's it. Now, if Julie comes over to me and says, I don't even have a single customer, or I built the software, this is it, and these 5 customers have committed to pay. And so she tells me, so 5 customers times 10,000 a month is 50,000. She's bringing 3 million to me, say I'm making 3 million a month. Julie's saying 50,000 a month. At this point, we are 3 months old. I will give Julie 50 million if I have it, right? But I'll say Zilani no. So that is the difference between a startup and an SME. So investors, angel investors, VCs do not touch SMEs. It doesn't matter, you come over and say, I have a supermarket and I want to open a next one. No, that's not what we're interested in. We're interested in how do you add value here so that your returns are really. So even if Julie's not making money for the next 6 months, she will keep on raising money. Because if you look at Uber, they don't make money in most of the cities in the world. They make money in specific cities. For her argument is, look at the demand I have. Actually, $100 a month is expensive. We want to reduce this to $5,000 or to to 5,000 shillings or to 2,000 shillings because there are nail shops in Babadogo, there are nail shops in Ongatarungai, there are nail shops in Athi River, there are nail shops in where. and they cannot afford, they don't make the same margin a nail shop makes in Nairobi. Okay? So we will be willing to finance her to acquire all those markets. Julie can extend from Nairobi to Kigali to Dar es Salaam easily within 2-3 months. Nzilani can't. Okay? She has to go look for a facility, set facility, hire employees, have contracts, go through all these things, and get issues of people stealing money from her. She doesn't have SMS reminders. Hey, your nails have not been done the last 3 days or the last 5 days. I don't know how often they do nails, but I think it's quite often. But it's a really, really good business. Finally, if Julie is going to go back to these businesses, she's providing software and say, listen, all of you, 1,000 of you, all of you have different brandings, different things you're doing. We from her database, she literally knows how many times that Myrene gets her nails done. And then Julie flies to China and says, hey, she's produced her own nails, her own acrylics, and all of those type of things. And then she'll help all this business brand, like Good Life. She literally is the McDonald's now of nails. Okay? And she can help them brand so that she standardizes, provides training. Are you seeing how Julie's business is becoming $1 billion business in the next 5 years? That is a startup. Okay? That is not and it's not a new business. It's not a small, medium-sized business. So when you separate those two, then make sure you don't call yourself a startup. I haven't had breakfast, so my tummy is just rumbling. But so the whole point is here, when you talk to an investor and say, oh, we are a startup, we've just started a nail shop, and we just have one in Kilimani, we want to open another one. An investor is already switched off. You have no idea what you're talking about. Yes. So if you're an SME, say we are an SME, that's a different conversation. So if you're starting that, if you don't have that clear definition, it's like that, the basic of 1 + 1, you got it wrong, then you've already lost the conversation from the minute you introduce yourself to an investor. This is standard. This is not a term that is an American term. This is standard. Investors think the same way, they read the same book, they follow each other on Twitter, they have the same conversations. This is how they think globally. So I have made that mistake myself. And I think it was, what was this guy? It was the vice president of Apple, the right-hand man for Steve Jobs. He walks over to NILAB, and I'm so excited. I walk up and pitch to him. I knew I had lost that conversation with him 3 to 5 minutes. Because he just looked at me and said, I'm a high bandwidth individual. I was like, what does that mean? But ideally, is that he had already understood what I'm trying to do, and it was completely off his chat. He was not interested. So get those terms correctly, whether you're a startup or whether you're an SME. Thank you.
I think we'll hand it back to Wangeshi, who's going to...
Yeah, okay, thank you so much. Thank you. Maybe before I do that, I'll ask Jerry to say something, just as a closing. Then she can hand over to me.
Thank you for a lovely conversation, panelists. We have really gained a lot of insights. I think there's one thing in our classes we keep talking about, get comfortable with money. And why do we say that? Is the conversation with money is not taboo. And when someone is asking you how much you make or how much do you want, it's no longer something that is something to hide. So this conversation goes on further after this session. So we have invited a number of financials that we are going to be meeting hereafter. Immediately, if you need to top up your cup of tea and whatever snacks will be right in that tent behind there. So we will have Ken and various others that are in the room so that you can dig deeper into, what is the kind of business you are in, what are the difficulties you're facing, how much further conversation would you want for this conversation to go on, so that your business is in line with whatever are the details that your financials are looking for. And then you'll be able to understand, are you looking for an investor? Do you want a commercial bank to come into your business? How badly off are your numbers in terms of debt, and how different can Wylde help you to restructure that so that you're thriving? Thank you.
Excellent. Thank you so much, panelists. I have really learned a lot. I hope you're looking forward to coffee with the panelists so that you have some camera moment and you're able to ask them the questions. If I was to summarize what has been said, I would talk about mindset. You really do have to change your mindset. You have to change your mindset, have collateral as part of your strategy so that you approach the banks or the financiers with confidence. However, you also need to note that the investor needs you probably more than you need them, and to go there with confidence and ask the right questions and know exactly what they are looking for. I don't know if you have questions for the panelists. We had Dr. Shiko here earlier. We have Ken Watito, head of SME Rafiki Bank. We have Sam Gishuru talking about Kidato. I believe you launched the online school during the pandemic, did you? Yeah, so an innovative idea of an online school. Maureen, and I liked what you said, that you actually tapped into a training program. The purpose of the training program is to change your mindset. Because if you come in and get funding with a faulty mindset, you're going to waste the money. So that's why you have training opportunity first before you access funding. So don't shy away from training. Get into it because it will tailor make you for and help you to scale up and get funding. So we have the panelists. Thank you so much for your time. It's so valuable. This is the real thing, mambo kwa ground, as we say it in Kenya. So at the tent, please, if you have a question, I'm taking 3 questions, and then if you want to target it to a particular panelist, please indicate that. So if we could have a roving mic at the back, I can see already. Okay, I'll take 2 questions from the tent, 2 questions from inside. Is that okay? And introduce yourself again, a networking opportunity. Ask your question. If you want it directed to one of the panelists, let us know. If not, just generalize it. So we'll take all the questions and then answer so that we save on time. So at the backs, please stand up so I can see you.
Good morning. My name is Grace Ochori. I'm from B-Lab Africa. We help businesses to measure their social and environmental performance. And I'm curious about how the entrepreneurs on the panel have included this into their strategies, owing what we saw from COVID. You create loyalty with your business and resilience with your business on how you treat the people around you in the environment. So how has that shown up in your businesses, social and environmental strategies? And then for Ken, as you're considering...
Just a minute. Whose question is that?
Any of the entrepreneurs.
Ask the question again.
How have you included social and environmental strategies into social and environmental impact strategies into your mission? Then for Ken specifically, are you considering this social and environmental impact as part of the loaning criteria for your loaning facilities?
All right. Your name? Grace. That's Grace. How are you including social and environmental impact strategies into your mission? Okay. I'll ask who will take that question. All right. So Maureen will take that question and Ken will answer that. Okay. All right. Second question.
Yeah. So I got a question. Let me just stand here real quick.
Yeah. Let me see you.
It's Davis. Hi, Faustina.
Hi, Davis.
Hi. So I got a question for Sam. I'm Davis, runs Zemo. My partner is here, co-founder. And we run about 100 salons. I'm just joking. No, so the first question is basically, right, how did you manage to have 78 investors have a conversation with you for the first month, right? And then the second part is not a question, but we would love to have at least 5 minutes with you, if you do not mind, and also Dr. Shiko. Yeah, 5 minutes, that would be awesome. Yeah, that's it.
Okay, thank you. That's a question to Sam. How did you manage to get 78 investors? How do you have a database, or how do you do that? And 5 minutes after. That's for coffee time. That's from Davies. Do we have another question? Okay. Tell us who you are.
Hi guys, my name is Steven Kamau. I am the CEO of Glycos Yogurt. We offer the best yogurt in town, so actually we are really expanding to see other places getting to taste our yogurt. My question goes to Ken. Not Ken, what is the name? Sam, yes. My question goes to Sam. You've really enticed us with the number of investors that you had. I would want to know, how did you come up with the investor that you settled in, and how did you negotiate, and how did you really figure out that this is it and this is the person I want to go with? Because 78 investors is not a joke. So how did you get there? And by the way, from what the other gentleman asked, how did you arrive at 78? I still insist. Thank you.
Okay, thank you, Stephen. I love your elevator pitch. Did you hear what he does? So you need to know how to introduce your business in 1 or less minutes. So how did you negotiate? That's to Sam. Same question with Davies. How did you manage to get 78 investors, and how did you know the right one? You can imagine it's like a marriage proposal. Ladies, do you hear me? The years in the 20s, I go back there, because you have all these guys wanting to date you, and you don't even know who's the right one. So 78 investors, how do you know who's the right one? How do you close the deal with the right investor? Inside the room, do we have questions from this side? All right, if you could give her a mic. I love your hair.
Thank you. So my name is Stacy. I'm a beekeeper. I'm a beekeeper, founder of Honey Crib Limited. And I'm targeting having 1,000 beehives in the next 5 years. That's my big, hairy, audacious goal. My question, or rather comment, I wouldn't say it's really a question, but my comment is, I have gone through several trainings, and I can say for sure that that is one way you cannot go wrong when it comes to being an entrepreneur. Knowledge is something you can always soak up. And I have met with Chris in one strategy class along the way. And I think my interest is, and question is to him, because I feel like as an entrepreneur, I have the skills, I have the knowledge, but somewhere along the way, I have gotten stuck. I don't know if it is the capital or lack of access to the finance, because I believe I have a solid strategy. I believe my business idea is strong, but I am lacking strategy maybe, because I have everything else.
Ask your question again. That's
because
this to Chris.
From my classes, one thing I learned is capital is not everything. You cannot wait on capital to begin your business. And so I began my business. I feel it has moved a long way. It is now in its 2nd year. It is still a startup. And I believe I may require some of Chris's help in terms of just having a look at my strategy and saying, is what I'm doing right, or am I going somewhere? Because I am still where I was 6 months
you're
ago.
saying you went for training, you have a strategy, you're
Yes.
still, in terms of sales, you're still where you are.
I am still where I am. I was. Correct.
What is your target?
My target is to have 1,000 beehives next 5 years. I know capital is an impediment because I am not buying honey from someone and packaging and selling. I am dependent on my own beehives and production for assured 100% organic honey in a farm with no fertilizers or chemical pest control methods. And in as much as capital is not a problem, when it comes to you start your business, it is still a challenge because one, you do not have access to those financing options. So how are you able to then grow if you cannot get the capital? You have your strategy, but you do not have the capital. So the sales are still where they were, which is a bare minimum to now. So now I started with 15 beehives.
From the time you did the strategy training?
That is 1 year.
1 year later,
yes.
yeah? Okay, that's okay.
Yeah.
Chris? Chris, you'll take that question. That's proof of your concept.
Yeah, so 15 hives, I still have 15 hives. So my production is still the same. So my sales are still the same. So without capital, how do you then proceed?
All right. Your name?
Stacy. Honey Crib.
All right. Stacy, thank you so much. Does this strategy really work? Please prove your concept. I'll take one more.
Hi, my name is Martin. My company is called Naincho Farms. We do
Your company is called?
Naincho Farms.
Yeah.
We do value addition of bee products, so honey like my friend here, and we also do cosmetics from the beeswax. So my question is for Sam, who spoke about equity financing. How can I set up my SME to be ready for equity financing, and what exactly am I looking out for? How much should I be comfortable to give up? Yeah, like what should I get from the person who I'm willing to give part of my business? I don't know if that is clear. Thanks.
Yeah, that's Martin. He's asked, how do I set up? He does value addition of bee products, beauty products, and what else? And honey itself. The honey itself or the bees? Value addition to bee products. So he's doing honey and beeswax. Cosmetics from beeswax. Okay, we're going to start with Maureen. You have your question? It was on social and environment impact strategies into your, how do you include that into your mission? Question by
So basically, Nyayo Mom's Sokos is actually a social impact. And I said, I think our goal is to, so how have we integrated it? We've humanized our processes. So we work with business women in terms of trying to, not really in terms, we've created a marketplace and access to markets for MSMEs, women-led MSMEs. So that on its own is already social impact. But one of the things we try to define, or conversations we have with our business women, is parameters used to measure a business. In fact, when you're asking that question, most of the time we look at business in terms of, is it generating revenue? Is it, is it growing in terms of sales? But we fail to measure the social impact. So one of the things we've defined, some of the things that actually, the necessity things or the necessity-driven businesses that women get into. Like for example, every time the revenue I generate from my business, I look at it in terms of, this business is helping me run my kitchen budget. I am buying from women within the ecosystem. I am paying bills. I am paying my house girl. I'm ensuring that my domestic manager is sending her children to school. So I'm measuring that. So that's a conversation that we want to really start having, people documenting really what are the social things, why are you in business? Because at times it can be, tangible things which are the traditional measures or the metrics that we use can get you off. But I mean, like, I sustain myself. I live a dignified life. My child is going to school. The people around me are actually benefiting from running businesses. So for me, that's how I look at it, and that's how we're integrating. So we're trying to define other metrics, businesses, other than the traditional. Is sales growing? Is revenue growing? Is that growing? So that's one of the things we're trying to do. And just as a comment, I know the question was not directed to me. B has other products that you can consider selling other than honey. So I think that guy already said. So you can also try and look at what are the other products that you can derive from that entire ecosystem of your beehives and all that.
Okay, thank you very much. I hope the question has been answered. Ken was to answer from the bank perspective, but if he comes back, he can answer that question. Ah, there you are. Hey, I almost bypassed you. The question was on social and environment impact strategy. How are you incorporating that into your mission as a bank? Are you checking for social and environmental impact strategy when you're considering to give to funding to an SME?
That it's an agenda that we are also taking up, and it's anchored all the way with the regulator. So this is not going to be applicable to Rafiki only, it's actually across the field, and peers, competitors, and juniors in the market are supposed to start doing risk-based pricing that are cognizant of environment and social impact adjusters to the portfolios that we're actually looking at. This is also what is informing the restructure program that banks have actually pushed in a more agile format, whereby we want to reach out to businesses and understand what was the disruptor. And now that we realize that we're actually in the VUCA times, everything is uncertain. Yeah, everything looks like you need a financial partner to understand what your business is going through, and how can we make sure that we give you a palatable solution as an exit strategy. So answer the question is, we are very much alive to it, and it's going to be part of our risk acceptance criteria with environmental risk assessment.
Okay, thank you. I think that is covered. I would like to ask Chris now to tell us why Stacy did a strategy, and 1 year later, she's her sales are still at the same place, and Stacy is representing others in the house. So Stacy is just for us to have a human face to it. I've done my strategy. I have a target, clearly defined target. Why?
Okay.
Hasn't the needle moved?
Why
And just as you're answering, Mercy, you respond to any of the questions that you connect to before we go to Sam, just in order of answering the questions.
Okay.
Chris, over to you.
I think from just the conversation that I'm hearing people talking, I'm hearing everybody saying, I have this product, I have this product, I have this product. And when you're talking about strategy, what you should be asking yourself is, who is my customer? What are they trying to do? And how does my product help them do that? So we always have to start from the customer side, not the product side. So even when you introduce yourself, you should say, my business supports this kind of customers, you know, and helps them and helps these customers do these kind of things. So that's where you should always be. You should always be focused on your customer. Then you won't have sales. You just have products, you know. But if you focus on your customer, then you will be helping your customer to achieve certain things that they want to do. So don't be beehives. Say, I have customers who want honey. Don't say, I have value-added products from bees. Say, I have customers who want good skin, you know, and the products I offer help them to get to good skin. That's where conversation on strategy should start.
Okay, does that mean they come back just to troubleshoot on the strategy?
Yes. So whenever you're running a business, you are always required to consistently re-strategize and consistently ask yourself, am I doing the right thing according to where my customer is? It's like it's a never-ending conversation. And it's not so much that you need to ask yourself a different set of questions. A lot of times you need to ask yourself the same question over and over again, but you're asking from the perspective of, how well do I understand my customer? How well do I understand what my customer is trying to do? How well do I understand my customer's needs? So you always go back and ask the customer again. So you guys didn't buy this product. Why didn't you buy it? Or what are you guys doing? What are you guys using for your hair? What are you guys using for your skin? Why do you like that product? Have you ever considered this? What is your opinion about? So you always have to go back to the customer. And using the answers you get, you come back and change your strategy.
Okay, so customer-centric as opposed to product-centered conversations. Mercy, do you have something to add on to that or to any other question that has been asked? And then we go to Sam.
Okay, thank you very much. It is true, as an entrepreneur, you are so excited about selling your products. And in fact, your focus is really on that product. but you can really, really mess it up because sometimes you don't connect with you just know what you want to sell. And let me give by way of example in my own business how it happened. Yes, we are a college. All these great values, you know, you are a Christian. There are all these great values you want to impart, and you know the school has a lot of discipline. You are keen on academics, and we love the word quality, which the customer doesn't even know what you're talking about. So we ended up selling college to parents, and parents were excited. This is the college for my son or daughter because there is discipline. There is what? The quality. You know, there is all that. But we completely failed to connect to that college goer. And for a while, we sold to parents. But then you realize the generations we have today. It is the college students who make the decision. They're actually the decision maker. Yes, it's not the parent. So we had to switch. Because the students don't want to hear sijui discipline after 4 years of high school, but the parent wants to hear that. So it is very, very easy for you as an entrepreneur to really pack all your issues around the product. I think it is time that you just go out and do those researches and investigations of what does your client really want, and also what are their pain points, what pains them, so that you can answer to what it is that they are really, really interested in. Because finally, we had to change and start focusing on the student. We stopped selling discipline, our brochures had to change. We started to sell fun. You know, of course, quality is still there. And of course, the real thing we were selling, which was preparing them for the marketplace. But there are games, there is fun, there are excursions, and a little bit of excitement had to be brought into what we were selling. And now we could connect with the real client, with the real user.
Okay, excellent. I really identify with that. I have a 19-year-old going to campus, hey, and all my plans have been shelved. She's the one deciding where she will go, and the place where we were hoping, where she's hoping to go, the orientation was a bus ride from Nairobi to Athi River, and they put that on social media. That really tickled her and excited her. Like they were received with, you know, glamour, and honestly, the strategy is quite different. If they focus on the student, they get the student, and that's working. So that's, thank you for that. So the question to Sam is 78 investors. How do you get 78 investors? How do you know this is the one? Well, there was another question. How do I set up my SME for equity financing? Over to you, Sam.
Thank you. So first of all, I'll just ask for forgiveness. Mnisamehe kwanza. Sababu, I want to give very contrarian answers to what you've just been told, because I'm not into the SME space. So maybe run from the top to the bottom. The person asked about social and environmental impact. I want to look at that in 3 different ways. Are you having a negative impact on the environment? Are you having a neutral impact or a positive impact? If you're having a negative impact, you need to shut down your business. If you're having a neutral impact, that's not an important metric to care about. You still, especially if you're trying to fundraise between below a million shillings, 100 million shillings, your first priority right now is to give customers something they want, to solve another problem. It's not start thinking about social and environmental. Tuachie watu wazungu hii problem, okay? Because you're still trying to feed your family and take your kids, pay for school fees and pay rent, right? So I'm building a business, trying to sell something. I'm thinking, how am I impacting the environment and whatever? And you're starting to implement all these strategies. At that point, as soon as you start scaling a business, then ask yourself, how can I take 1% of my business revenue and put it back in social and environmental impact? From profits, not from fundraising. You don't come ask for fundraising and then say part of it is going to go and do this because it sounds like a very funky cliche thing to say. Okay? Build your business, stabilize your business, have a product market fit, go to market, start scaling, go back to your business, do your CSR, take 2-3% of your profits, put them to impact people, okay? That's my thinking. If you have negative impact, of course, out. If you have a positive impact on environment based on what you're doing, that's a key metric. make sure to include it in your conversation. We are doing X, Y, Z, and we're impacting the environment and the community this way. Safaricom didn't come to the market and start thinking, well, what are base stations supposed to be doing? No, they first gave you mobile phones, and then they gave you all these things, and now they have Safaricom Foundation from the money that sits in the account from your M-Pesa. The interest generated from your M-Pesa money that's not in your account, it's in the account, is what goes to build Safaricom Foundation, because it doesn't belong to Safaricom, and then they have a bigger impact, okay? So if you think about it slightly different, then you stop wasting time on things that just sound nice and please people, okay? First thing is be profitable, okay? And then from the profits, invest back into the community you're in. Otherwise, you can't eat your seed, okay? You can't give away your seed. The seed is supposed to be planted to produce more. So that's my first response to that particular question. That's my view, just personal opinion. I said I talked to 78 investors. Ikizungu ni ngumu. I don't have 78 investors. I have less than 30. I think about 25 or 28. And I can break those investors down to you. So how did I get to have 78 investors? First, what Maureen said, having a group of people. I have a group of 10 guys. They've all fundraised in the same WhatsApp group. When I said I'm fundraising, they all compile an Excel with all the investors. And they rated the investors and said, this is a good investor, this asked for too much due diligence, this one doesn't write the check quickly. Because one of the conversations when I finish with you as an investor, within 15 minutes, is that, are you going to invest? That's my final question. Are you ready to invest? How long do you make a decision? If you make a decision more than a month, I will have probably closed my round. So you'll not be available for that investment. I talked directly to 78 investors. I pitched to 4,000 investors, okay? And my pitch was 60 seconds, 1 minute, okay? That's how it was. So I had 60 seconds, about midnight. So what happened is that when you join Y Combinator after the 90 days, Y Combinator is the same as NILAB. Actually, the concept of Y Combinator is what I try to replicate for NILAB. What happens is that after those 90 days, we were 300 of us, 4,000 investors were all online, and you get your chance, you get on Zoom, you have 60 seconds to finish. In those 60 seconds, you're supposed to tell them what your business is, what the traction is, what the market is, what your value proposition is, you know, what size of the total addressable market you're addressing in the continent is, how much money you're looking for, what your team composition is. Trust me, 60 seconds is a very long time when you know what you're saying. You have to be very short and succinct. So the 4,000 investors, what they do, because Y Combinator gives them this panel. So it's like a Facebook thing. So when I'm pitching, they're seeing me on video. When they click like, I immediately get an email that says, XY person would like to invest in your company, here are their contact details. And then I shoot an email straight back to them after I'm done pitching. So the ones that came were the ones that click like, they're the ones I got in touch with. This is why you get into programs like this, because on one go you are talking to, 4,000 in this particular case. And you're seeing the likes that are coming in, and so you know your meetings are being scheduled. Of course, my friends also would take, the same investors were, of course, on the Excel that was compiled by my friends, and then they did some of the introductions. So just to be clear, I don't have 78 investors or whatever. I have between 25 and 28. And my last investor was also a syndicate. If you go to angellist.com, you will see how a syndicate works. How a syndicate works is that I come, I see your business, say your business is interesting, then I tell people, hey, this business needs $100,000, and the people come and give me 5,000, 2,000, whatever. I compile. It's like crowdfunding, but they give the money to me, and then I invest in her. And when I invest in her, then I'm the one who's holding my name on the cap table, but I'm responsible for this investment. You can read a bit about syndicates. You can do syndicates as well. So that was my last investor. So there's a syndicate thing, there's the angel investors. If you're a really small company, as you are right now, do not go looking for venture capital. There's VC. Investment is not, there's bootstrapping, family and friends, then there's angel investors, then there's angel funds, or seed funds, sorry. So angel investors, then seed funds, and VC. If you're a small business and you're just going to look for a VC, that's a pain, don't do that. You need angels and seed funds. They have very shorter, turnaround cycles, and they give you feedback. VCs are, they write checks for $1 million, $2 million at a time. These angels write 5,000, 10,000, 100,000. Seed funds write 150, 250,000. So just make sure that you're talking to the right investor. If a VC calls Kidato right now, I'm like, I will talk to you during my Series A. When I'm raising $10 million or $20 million, I'll talk to you, and you can write $1 million checks, and I can get 10 guys to do that. Just understand that whole process. Kuna friends and family, they're angels. They're called angels because they give you money despite the fact that you might fail. They are seed funds. They look a bit about your business, and they give you money. Then the VCs themselves do a lot more. Then, of course, it's private equity, and then there's IPO. There's a whole part there you need to learn. The second question came from, yeah, that was David. He wants to have a meeting. I don't know if he can make mandazis. I can take the meeting. I don't meet people who can't cook mandazis. But happy to meet him. Stephen, I'm trying to remember Stephen. He was right at the back. He had yoga. Okay. Again, as I said, I looked for people who have invested in education. One of my favorite investors is called Amir Thor. Amir Thor is the CEO of OutSchool, which is now a $1 billion company. But when he was investing in me, his company was not a $1 billion company. The reason I loved about that is OutSchool is an after-school class program that actually grew during COVID more. So what they offer is that the same thing we do after school, you can learn anything, go to outschool.com, from Swahili to anything you want. So when I aligned with somebody like that, I gave that person a very good small cap, market cap, so that I can use his name, right? So for example, the person here decides to start that nail store. They come over and they talk, they say, hey, Sam Gishuri is on my cap table. You will have a lot more doors opening because I'm known to invest, right? Which means I might have seen something in you that is worth it. So you can actually choose people based on that. Another, I could mention a few names that I got on board who wrote very small check, like $500,000 Kenya shillings, and I just allowed them into my cap table so that I can brag with their names. You can name drop them to other people who might have doubts. So there's also that as a strategy. How about dilution? That's a question that came in. How much are you supposed to give out when you're raising seed funding? If you're raising seed funding below 20%, especially anything between $500,000 to $2 million, do not give more than 20% of your company. Because what happens in the next stage of Series A, they want another 20%. So you'll be left with 60%, and it's okay. It's okay because, if you give, by the time, let me just throw some numbers, and please don't tweet that out. By the time I was starting in December, when YC came in, Kidato was valued below $1 million, its market cap. So I get into YC, it's already now at $1 million valuation. In those 3 months, it was above $10 million. So at current market price for a seed company, we are worth $1 billion. Okay? But when I was starting, so even if I'm holding 10% myself right now, I own 10% of $1 billion market cap company. That's a lot of money, right? But that's in paper. It's not sikona your pesa komfukom. Like somebody will have to buy me lunch. But I'm saying that's how valuations are done. Yeah, so you have to keep it below 20%, 15% there for $1 million. So when an investor comes over and says, we want to give you $100,000 and we want to take 50% of your company, that's a very good place for you to walk away, okay? Because if your company does extremely well and the next investors come and say, oh, we want to give you $1 million, your valuation right now is $2 million only, so which basically means that you end up with 20% of your company. So dilution is something you should talk to a consultant or somebody who understands it and tells you, we're going to dilute at this level. We give them 15%. We're going to sign a SAFE. A SAFE is a promise for future agreement. So my investors don't even have shareholding in my company. That shareholding will convert for them when I raise my Series A. So right now, this is just a promise for that we will be successful, and when we make money, you will make money. So they are invested. So at the end of every month or quarter when I send a report, I tell them what I want from them. I'm hiring this person, I'm going into this market, and I need your help, and they have to introduce me to those people because the only way they'll make their money back is when this company grows. So I don't know whether that clarifies that slightly. Okay. Yeah, so I think that was the last. Stacy, I have a question for you. Sorry, quick one. Throw the strategy out of the window. I'm sorry, Chris. And let's throw your marketing strategy out of the window. You have 15 beehives. What stops you from getting the 16th one or the 17th one? That is a question you should ask yourself. What stops me from, not the 16th one, not the 20th one, the 16th hive. What stops you from getting it? Now, if you walk up to all your friends and all your relatives and they have a farm, and maybe the cost of a beehive is between maybe 5K to 10K, okay, you can get the 16th one and the 17th one. So you can grow. The problem with this strategy is the whole thought of I have to invest in marketing, I have to do this. Forget marketing if you're a small company. Forget extensively investing in marketing because it will be very hard for us to calculate your CAC, customer acquisition cost, and then whether it's a net zero or not. So what you do is sell. Sell, sell, sell. Sell here before you leave. Sell 5 beehives. That is growth. Strategy doesn't matter. If next week you come back and say, Sam, I have 20, then I'm like, wow, this is exciting. The other week I have 25, that's exciting. You're literally growing at a rate of 30 to 40% week on week, okay? Just by talking to individuals. So this whole strategy, write a whole business plan, write a whole things. Market is unpredictable. We're in an electioneering year, we had a pandemic year. When I look at those paperworks, I'm always thinking, this is zile insha tuliambiwa tuandike shule. You just bring it from your imagination because you're not actually talking to your customers one-on-one. So what Chris says is focus on customer. That's exactly where I would be in the business. Thank you.
Hearing that you need to have your negotiation cards before you go to see your investor. Know what percentage you're able to give away. Know what your ask is. Bring some on board to read. And because that opens doors for you, be customer centric as opposed to product centric. And what I'm hearing from some is have a pipeline of businesses by knocking on more doors. One burning question, and this is, if you could just ask your question, and then we'll do a photograph session with the panelists as we come to the end of our product.
Good morning. My name is Brenda Shimoli. I work for a pension institution called CPA Financial Services. I just have one last question. As entrepreneurs, you seem to be very confident in getting results and your business growing and sustaining you into the future. Do you have any plans to retire? Do you have a retirement plan or intend to try raising capital in your 70s?
Who do you want to answer that question? Do entrepreneurs retire? Do entrepreneurs retire? Somebody says no. Do they retire? Are they even planning to retire? And how do you go on vacation? Yes.
Yes, I think what does retirement look like for you? I think we need to move away from the group definition to the individual definition of retirement. I'm already planning for retirement, and how that looks like for me is I want to go to the village and I want to go back and traditional vegetables and sell to people who are shifting. So I'm already planning about that. I was in the village last week. I'm already looking at how that model will look like. So I don't even know. I do know I've piloted the tryout experiment. So for me, I'm very clear. I want to go into food security and food and sell to people nice food and nice burgers. I make very nice traditional vegetables, and it's a signature. So I went to the village last week. Actually, I came back yesterday, and I've already started looking at it. We have underutilized land, so I'm just thinking about it. So yes, we do retire, do go on holiday. Sometimes no. When you're doing the weightlifting, which is at the formative stages of your business, it is no. So I think, so it's define how that looks like for you, and it's a lot of work. So don't start thinking about holiday now. Think about holiday after you're done with the weightlifting. It's heavy, and sometimes we are here looking very nice and talking about all the success things, but it's a lot of work. We have to show up. We have to show up so that the next generation is inspired, so that we can inspire you. It doesn't mean that we're not going through struggles. We have our day-to-day struggles, but today it was an inspirational talk. Another day, maybe we'll talk about our failures, right? So for today is to inspire you.
Those are really good stories.
Today we are inspiring you, but maybe next time let's talk about the tears, the things, the mental turmoil, the things that we really go on the reality, the other side of the reality. So it's not all roses and unicorns.
Okay, thank you. I'll ask Irina to close this session. Please, just does an entrepreneur retire?
Okay, maybe I should just stand. So that's a very interesting question because I worked in that industry for about 3 years. So for Maureen, your answer is correct. But from where I sit, I think it's also not correct. Let me tell you why. You're saying you're moving from being an entrepreneur in town and your retirement is being another entrepreneur. That's pretty much what you have said. That's how you've defined it. Anyway, but I think coming from her field and having worked in that field for a while, the thing is when you're unable to work, So it's not possible to move from entrepreneurship to entrepreneurship in retirement. So at that point, when you're thinking about age and things like this, what will sustain me? And I think that was your question, isn't it? So one of the things that, and again, Maureen, thank you very much for that, because it's triggered a few thoughts for us, is most entrepreneurs think that their business is their retirement plan. Yes. That's what they think. Their current business is their retirement plan. But the truth of the matter is the business can fail in the future, isn't it? Yeah. So how do you prepare for that one day when you're not able to work? And I think how I would answer that is you need a pension plan of some sort, or you need a savings plan of some sort. And that's why people like, please remind me your name again. Brenda from the pension CPF, come in. Because there's going to be a time, so let me just summarize quickly because of time. Your business is not your retirement plan. That's number one, yes, because your business can fail at some point. Secondly, transitioning from this form of entrepreneurship to the next form of entrepreneurship is not a retirement plan. The only thing is that you're changing this from this to that. You're still the same entrepreneur. So the best time to start saving was yesterday. The next best time is today. Tomorrow is already too late. That's what I would say.
Excellent. Fantastic. That sounds like another chapter. We shall invite you for that chapter on how to protect your funds and ensure you have a dignified retirement as an entrepreneur and that your mental health is in check. Sounds like we have another workshop. So we've come to the end of our session. We would like to do some photographs, and then because we document our stories, right? As an SME, document your story. So we want to do that, and then we'll ask Faustina to come and give the vote of thanks. So panelists, thank you so much for your time. It's very valuable. When an SME gives you a whole morning, hey, please, if you could stand at the front, photographers, Salaton, Okwiri, we have Standard Media and Business Daily. Please come to the front. We'll also ask the CEO of Wylde to take this photograph as we officially launch the SME Access to Finance Research Report. All right, we'll also ask Irina to be there. Okay. Please look at the camera. If you look at me, the photo will be rejected by my editor. Okay, Salaton, is that photo working? Or do we reduce the numbers? All right, so we do this big one, is for social media, and then we're gonna do, how do I do this? All right, so what we're going to do, we swap the lady and the gent. All right, then you're going to do this photo first with, is that okay? Salaton, we do that photo first. Have some space. And then you could do a gender balance, madam, if you could just be at the center. These are our editorial photos. They like at least 3 to 4 packs, so we split the code. I hope you've learned something. Do you have at least one takeout? Whenever you attend an event or something, so that you're not just acquiring knowledge, you must have one takeout you're going to implement so that you are moving forward, not just acquiring knowledge. You have at least one practical thing you will implement. Actionable strategies that you take away with you. Sorry? for the Wylde? All right, so we'll ask the panelists if you could take your seats. We'll have CEO and the Wylde strategy, Mr. Kirinya, and CEO Chris, if you could do this photo. Do you need the panelists to be on this side? If you could come to this side, we'll appreciate. Off the stage. One looks tidy. One looks tidier. One booklet you share. Is that centered enough?